Happy Friday. We're half an hour away from the opening bell here in Hong Kong. You're watching the China Show. I'm David Ingles with Yvonne, man.
Our top stories this morning. Chinese stocks set to outperform Wall Street for a fifth week, with Hong Kong entering a bull market. Other Asian equities and bonds rising ahead of the U.S. jobs report.
Apple rallying in after-hours trade as it forecasts a return to sales growth and announces the biggest stock buyback in U.S. history. Revenues in China, though, more upbeat than expected.
Plus, Bloomberg reveals how blacklisted Chinese tech giant Huawei is secretly funding cutting-edge research at U.S. universities. We made it after a brief little blip of a holiday on Wednesday. Didn't quite feel like one, but we're entering Friday on a positive note here. Keep in mind, Japan and mainland China markets are closed here today. So obviously there is a bit of an intervention risk once again as Japan enters into this holiday Monday as well. So certainly you're watching very closely the strength that we're seeing in dollar yen, 153.20. So certainly we're holding on to that strength here. We're back to levels that we saw maybe about 3 weeks ago. We'll see if we see any signs of indication of whether the Ministry of Finance needs to do anything more. Japan is doing pretty well in terms of equities here today. We're seeing some pretty decent gains, I should say, when it comes to Taipei. Look at that. TAIEX is up about 1.3%. The Apple story certainly is one thing that is fueling that. You take a look at what's been going on. So better than feared, these earnings for one part. That record buyback, as we just mentioned. And they also talked about China performing better than expected here. It was still an 8% drop on sales, but still beat the street there. So this is why you're seeing some of these Taiwanese suppliers like Hanhai up more than 2% here, 1% gains from Pegatron, Quanta, as well as TSMC. And we saw a huge surge of tech really being bought in the U.S. session. Take a look at what the Nasdaq Golden Dragon did. It was up some 6% and really followed the momentum and these moves that we're seeing here in Hong Kong as well, where we finally solidified entering into that technical bull market yesterday. We're watching very closely what goes on here today, because it seems like even without Chinese investors, this market can continue to rally. So is this really now a momentum play, something that people can back? Does it spark some sort of re-rating? I think that's still questionable, Dave. Futures are looking like this here right now. We also look at those GDP numbers out of Hong Kong. Strong. Some of the biggest, I think the biggest beat in more than a decade, Dave, right, on those GDP numbers. So certainly there's a lot about the flows going into this equity market that certainly might help the growth picture as well. Also, when you take a look at, given all the volatility in FX of late, that dollar peg is really certainly helping as some sort of haven, and people really flocking back into this market.
Yeah, as a peg, right? It's almost a dollar proxy, really. Certainly one of the arguments that's been brought up. Why this Hong Kong equity market has been rallying quite strong. On Yvonne's other point earlier on, so a nearly 2 percentage point beat on those prelim GDP numbers out of Hong Kong, which came out yesterday, which is the biggest margin relative to estimates, a median estimate to be more specific, going back to 2010 or 11, I believe. Right. Maybe some short-term signs of overheating in the stock market. We'll show you that graphic in just a moment here. The rally in the currency, dollar China, down 0.4% on Thursday, down a further 0.1% today. As you can bottom of your screens, we talked about Apple. Hong Kong retail sales are coming out later today. And, of course, this moon mission launch, of course, to the dark side of the moon. There we go. Right. So we've been here before, largely on price. So we're comparing this current rally on the Hang Seng China Index to ones we've seen amidst this sort of bear market, and we're actually climbing the ladder as far as that's concerned. So we're about 30% higher now from the lows.
So you mentioned about just the outperformance with the U.S., right? April was a really rocky one, what we saw on the S&P. But what we're seeing in China was this outperformance for a fifth straight week. So basically, if you compare that, as you mentioned, it is more about a kind of a gradual sort of warming up, I guess, of people being more positive towards China. Is it still just a tactical play? I think that's what John Woods from Lombard Odier said yesterday here, because you're still not seeing that macro picture look too great. He's also concerned about geopolitics, the like, but certainly there's a lot going on here about the flows and what's really driving this rotation.
Right. Who's buying it?
Who's buying it?
And so far, not just John Woods. I think just about every single analyst we've had so far, just this weekend, obviously that's not an entire pool of people, the universe there, have so far sided on that argument so far, that this is simply tactical money. Let's see. Well, let's get another opinion. Yvonne Lee joins us here on set, head of Greater China Equities at UBS Global Wealth Management, Chief Investment Office. Does this still seem tactical, short-term money to you, or is this bordering in something different now?
I mean, for such a move, we cannot just say it's just, hedge fund short cover, tactical money. Definitely, we start to see some long only from their very underweight positions, sort of adding a bit of weight. But I don't think, that they're already back to neutral. They're still far from neutral. But that said, as what, you have discussed earlier, we really need more evidence. We really need more data to sustain this rally, this move. Because we do know that macro-wise, macro property consumptions, you still have a lot of weak links there, as reported on the data.
And we were just discussing this Golden Week could be maybe the chance for us to see more of that data. What are you looking for in particular this week?
I remember that when Qingming Festival in April, people were surprised to see that the spending per capita actually surpassed 2019 levels. So now we have this May 1st holiday. It's a real holiday. It's a 5-day or 6-day holiday, you name it. That if they still able to surpass last year or even 2019 of spending per capita per person, then that will be a very important indicator that people spending or people willing to spend has finally detached from what happened to the property market. Because property sales prices is still under pressure. I think that's a very important thing that we are watching.
Is there reason to believe we'll see that? Or is that simply... In other words, have we started to see small signs of spending picking up?
Well, I mean, like if you sort of look at auto sales, April auto sales were very strong. Obviously, the trade-in is going to help further.
Right.
Home appliance sales were strong, despite the fact that property sales were weak, but completions were high. But still, home appliances is a thing. But some of like white wine sales were not strong because
white wine sales.
White wine prices were down, right?
That is it a shift towards red though? Is the question.
Rotation into red.
Yeah, continue your thoughts. Yeah.
But these are little things that we sort of monitor.
Right, yeah.
I mean, at least we can monitor. Yeah. But so far, the e-commerce sales or e-commerce management telling us so. Sportswear, they're saying watching closely. They have a strong, first 2 months. April sort of start to weak. So, I mean, it's a mixed bag in terms of consumption so far.
And you're seeing that in the earnings as well, for what we saw in the fourth quarter.
Yeah, the fourth quarter, it's better than feared. But I don't think that analysts need to revise up the numbers. So far, the earnings revisions is still on a negative trend. And this is actually a very important indicator. We monitor 4 things, right? Macro, consumption, property, and corporate earnings. All these 4 factors are very important to really drive a sustained rally of equity market.
And so very quickly then, what are your hopes then for the first quarter earnings these next couple of weeks that are coming out? Revisions, what have you?
Well, I think if we continue to have this sort of first quarter numbers, it's not as important because first quarter numbers, it's a guidance for management is more important, right? Because on a year-on-year basis, it all depends, sector. Some companies, would be able to have an easy base because last year was still part of it is under, COVID impact.
Yep.
So, but some companies like e-commerce actually have a high base because that was the time that people shop for a lot of things online.
Right.
So it's a tougher base for them for first quarter.
All right, Eva, we'll have more from Yvonne Lee, their head of Greater China Equities at UBS Global Wealth Management Chief Investment Office. Coming up on the China Show, we have an interesting scoop here, how Huawei is secretly funding cutting-edge research at U.S. universities through an independent foundation in D.C. We have details on that Bloomberg story just ahead. We're also counting down the open of trade in Hong Kong markets in Shanghai and Shenzhen still shut. We'll see this bull market, does it still have legs? This morning, A50 futures are punching higher this morning. This is the China Show. Happy Friday.
Welcome back. We're looking at some of these tech plays, just getting up and running, of course, in some parts of the region like Taiwan. You have TSMC and Honhai coming online. Some suppliers there, of course, on the back of some guidance and results, backward-looking and also, more importantly, forward-looking numbers out of Apple. Big pop in shares there. Bottom of your screens is that the ETF, of course, attracts the NASDAQ. In after hours, they're also seeing some upside there. The story here is, well, you have the CEO, Tim Cook, says he does maintain a great view of China in the long term. Speaking with investors after Apple's latest sales beat, he says that the firm has work to do in the country outside the iPhone sector. Mark Gurman has the details for us.
Apple reported better than anticipated Q2 earnings results, with the iPhone declining about $5 billion on an annual basis, in addition to the same for overall revenue, but the device actually growing in mainland China, according to CEO Tim Cook. The iPad also declined, but that was to be expected given that the device had not been updated since the end of 2022 and that new versions of the iPad Pro and iPad Air are coming next week. Services and the Mac were bright spots on Apple's earnings report, bringing in growth to the iPhone maker compared to the year-ago quarter. One negative was the wearables, home, and accessories category. That fell about $800 million. Luca Maestri, the company's CFO, said this was due to a tough compare from a year ago when the Apple Watch Ultra and the second-generation AirPods Pro saw strong sales in the second quarter of last year. Analysts and Apple executives were all very clearly excited about the prospect of Apple moving into generative AI. Apple plans to announce a slew of new AI features at its Worldwide Developers Conference on June 10th. For Bloomberg News, I'm Mark Gurman.
So at least the China sales are better than feared, but it was still a drop, right, of close to 8%. But it's interesting, right? They talked about outside of the iPhone, they still have work to do in China. There's a lot of competition. I think the AI strategy is going to be quite telling as well. I think we're expected to hear more of that in the World Developer Conference that they're going to have later on in the summer. But they have to be able to bring out new products, new lineup here to really kind of invigorate demand once again.
It's almost the same boat that Tesla's in.
Sort of, yeah.
Right? You know, the sort of what is the value proposition, which is still about there. And I remember, I think it was part of this quarter's earnings where they actually opened in Shanghai. Remember that? We covered that story in Jing'an, one of the biggest, if not the biggest, I believe, in Shanghai so far. And that's a really, really good location. Not that, of course, that is a bellwether of the quarter in China as well, but it does underscore the commitment, of course, to the country, given it is a very big, important
Especially if you've seen what the competition with Huawei has been. I mean, their earnings this week were explosive.
Yes,
right?
absolutely.
Just given what
numbers.
they've been seeing. They don't break it down, but certainly smartphone sales is one thing we're watching. Of course, we're still also talking about that buyback program, $110 billion.
Biggest ever.
Biggest ever. So certainly that's helping to lift the stock a bit here as well. You talk about the Huawei story. We have a pretty interesting scoop, too.
Yeah, so we've actually learned, Bloomberg has learned, that Huawei is, well, secretly funding cutting-edge research at U.S. universities through an independent foundation in Washington. Now, that's despite a web of restrictions over national security concerns. Let's bring in our tech and national security reporter, Kate O'Keefe. Broke the story for us. She joins us to talk us through this. Kate, fantastic piece. Just take us through the thinking and the story here. How was Huawei able to fund this research in secret?
Right. It is pretty interesting. What we found is that there's this foundation in Washington, D.C. called the Optica Foundation. It's like, it's a group of scientists who study optics, which has applications in lasers, telecoms, biomedical diagnostics, all sorts of things. They put on a competition to fund researchers at U.S. and global universities. They would award $100,000 to 10 researchers every year since this started a few years ago. But what we learned is that, in fact, all this money was being paid by Huawei. But all the researchers and university administrators that we spoke with had no idea about this until we told them.
So they were able to do this despite these web of U.S. restrictions right now. Is anything what Huawei did, is it actually legal, Kate?
I think that's one of the most interesting aspects of this. As far as I can tell from the reporting, nothing about this is illegal. It's true, there's so many restrictions on Huawei in the U.S., especially export controls, which are imposed by the U.S. Commerce Department, which prevent people and entities from sharing technology with Huawei. But, this competition is seeking to fund academic research, which generally is meant to be published, and therefore is exempt from export controls. So there's actually nothing illegal about it, but it has created sort of a challenging situation because due to all those other restrictions on Huawei, a lot of US universities decided years ago they didn't want their researchers working with the company. Huawei used to fund all sorts of activities at US universities, and then come 2019 or so, a lot of these universities said, no, we don't want these kind of collaborations anymore. And in this case, Huawei was able to fund their researchers anyway without their knowledge.
Very quickly, Kate, have we heard from either Huawei or Optica Foundation in response?
Yes. So Huawei has said that their name was just kept out of this because they didn't want this to be seen as a promotional activity and they just wanted to fund research. Optica has said, look, we have a lot of donors who want to be anonymous, including a lot of US donors. So that's their response. I mean, the issue, I guess, is that US donors are not subject to export controls.
All right, Kate. Interesting piece here. Thank you so much for telling it to us. Kate O'Keefe, our tech and national security reporter, joining us out of the U.S. here this evening. We're taking a look at what's going on in the pre-market in the Hang Seng, and it looks like a strong rally to really end the week here right now. You take a look at how the Hang Seng is doing. There you go. Hang Seng futures are popping higher. You take a look at how A50 futures are continuing to punch higher as well. The strength in the currency certainly is telling. We were briefly below 720 just earlier this morning. So we'll see how this all plays out for the rest of the day. Yeah, on the back of the biggest drop in the dollar so far this year, and the strong dollar story, and the peg we were talking about this earlier might be one of the factors that is continuing to drive this market here in Hong Kong. So we are set for a higher open, and if we do close above water today, it would be the 9th straight day of gains here in Hong Kong. The open, 10 minutes away. You're watching The China Show. Good morning. Some big corporate stories that we're following for you today. Sony and Apollo are said to have made a $26 billion bid for media giant Paramount Global. Sources say the offer is a non-binding expression of interest and would be an all-cash offer for Paramount shares, plus the assumption of debt. Paramount has also been weighing a merger proposal from David Ellison, the head of Skydance Media. Bloomberg has learned that Nomura and Mizuho Financial Group are facing more than $100 million of potential losses tied to failed stock trades by All Blue Capital. Sources say All Blue made a series of wrong-way short bets earlier this year and was allegedly unable to settle those trades. The size of the losses raises questions about the risk management at two of Japan's largest banks. Amgen shares soared in late trading after encouraging early results for the company's experimental obesity drug, Maritide. Now, the CEO told an investor call they're confident the drug's differentiated profile can address unmet medical needs. Amgen's emerging as a potential challenger to market-leading weight loss products from Eli Lilly and Novo Nordisk. And Adani Enterprises says it has received questions from India's markets regulator over possible violations. According to an exchange filing, the firm got two show cause notices over allegations of rules of non-compliance. Other Adani units also received notices. Adani Enterprises posted a 38% slump in profit last quarter, hit by one-time charges at its airport unit.
Right, we are gliding into the weekend and sliding into the next couple of days here, really on fairly solid footing as far as equity markets go. So we are on track for a second week of gains across the region. Caveat there, we don't have trading in mainland China and also Japan today. Japan is also shut up until Monday, of course. We've been talking about this intervention story, and certainly the strongest signs that they have done it, short of a confirmation, whether you look at some of the BOJ's and Japan's accounts with the Fed, for example, and how they're really looking to fund any intervention. Apart from that, it's a weak dollar story from Thursday, from this time yesterday, which is helping, I guess, boost and give it some runway across these markets.
Yeah, that's really helped. And Treasury yields have basically dropped across the curve just yesterday. We're not seeing that in the Asia session, but bond futures are slightly in the red. But that U.S. jobs report could be that next hurdle for dollar-yen. If we see any signs of a strong labor market, that certainly is going to roil this trade in this direction that we've seen. But it's interesting, right? Options traders, you take a look at the S&P, I mean, they're betting that we could see moves of about more than 1% either direction if we actually see that jobs report a little bit later on. So whether it's risk on, risk off, I think it's pretty split right now. But Hong Kong, I mean, that's just continues to be a good story.
Yeah, I mean, the momentum coming through here, and there are a couple of arguments coming through. We talked about the strong dollar story and the fact that we're pegged here in Hong Kong might be one of the factors. The other thing is, how do you express a long China trade when mainland China is closed if you're a foreign investor sitting outside, of course, Greater China, and certainly Hong Kong is one way to do that. Keep in mind, though, it's been a fantastic week. We're up 5% on the Hang Seng Index. We're coming off the best week in 12 years already. So we're up about 25%, give or take, from the bottom. So it's been a joyous ride so far.
I think year to date, not so much you're seeing the big gains, but I think really what we saw in April, right? And I think China has been, I think, the world's second best performing market behind Taiwan. So that certainly just goes to show how far things have turned in the last few months or so. But Hang Seng, there you go. HS Tech continue to see that bid. It's crazy what we've been seeing in the tech space here. H shares also up some 2%. In terms of analyst actions to tell you about today, some interesting ones in the property space. China Wanke is one of them. H shares cut to fully valued at DBS Bank. You have Tianqi Lithium, so watching the EV supply chain as well. Those H shares raised to a buy at Citi. Also higher smart home, so focusing on the consumption side of things here. H shares raised to outperform at CCB. It's interesting, too. I think Morgan Stanley had a note about how, there's improvement in the earnings, but they're seeing some sizable misses in the first quarter so far.
Okay, so until that becomes fairly more consistent across texture and tone, we'll really need to wait and see whether or not the cyclical trade then becomes, of course, a long only, and some of the money coming through as well. Apple suppliers very much in focus on your screens. AAC Tech, Sunny Optical, and of course BYD Electronic, to be more specific. They're Apple bottom of your screens. Also a tidbit going into the open, about just over 3 minutes away. Every single stock on the Hang Seng Tech Index is higher. We're now at 4,000 on that specific benchmark. It is indeed shaping up to be a very happy Friday. The open is next. Good morning. You're watching The China Show.
Welcome back. You're watching The China Show. We're counting down the open of markets here in Hong Kong. Mainland markets remain shut for this long weekend, and it doesn't seem like Hong Kong is letting up just anytime soon with this rally. We're up about a 9th straight day. We entered finally into that bull market yesterday, and we're seeing another gain of close to 2% on the Hang Seng, and it's tech once again that's catching a massive bid, and that strength in the currency still holding just a bit. We're at 720 levels right now, Dave.
Yeah, so arguably that initial leg up is in, and then we're waiting for more signs, an earnings bottom, inflation maybe coming back a little bit, some of that geopolitical premium retracing also somewhat as well, some of the foreign money that's so far been really paid to stay out, paid in the sense that it's outperformed because they've been underweight China. Do you need to rethink being underweight right now to a lesser extent? All that being said, right, so at 4,000, just to give you an example, so this index is actually up 30% from the bottom. We're still down some 60% from the peak, right? So just to give you a sense of how cheap the market is, but how long the road still is ahead. 2%, wow, 2% up. On the Hang Seng Index. I would imagine every single stock on that one is up as well. Quick glance at some of the key sector groups as well. The biggest stocks in the Hang Seng Index are bottom of your screens. HSBC, of course, annual meeting. We'll talk more about that later on. Tencent has been 3% higher in the early goings. Baba's up by about 4%. Some strength coming through in both the Hong Kong dollar and the Chinese currency on your screens. Flip the boards, please. We're looking at some of these Apple suppliers very, very briefly here. There we go. Nice thread of green across your screens. On top of that, SenseTime is a stock that just got absolutely berserk this week. Massive volumes coming through, 1.2%, and also the second best performing stock up until right now on the Hang Seng Index has been long for. That's up 2.4%, the property developer. Okay, let's take stock. how far have we come? How quickly have we gone up? Relative strength index on the major benchmarks here in Hong Kong. Hang Seng Index blue, Hang Seng China's yellow. MSCI China is coming off, I said pink or is that red? That's a bit pink. There we go. First time since the reopening rally in early or late 2022, early 2023, that all three are actually now signaling some signs of being overbought. Now, whether that's a sell signal that has to turn, all that said, it's been a quick pace, of course, from the bottom. We'll see how long this lasts. We're up 400 points now in the opening minutes. Yvonne.
All right, still with us is Eva Lee, head of Greater China Equities at UBS Global Wealth Management, Chief Investment Office. We talked about these moves that we're seeing already. I mean, is it too late to kind of join in on this rally now? How can you still chase it if you still can?
Well, I just saw that MSCI China Index at 61. Yes, it's a bit on the high side. Well, I mean, as I said, we need more data to prove that really out of the woods. But at the moment, we're still waiting. So if the market, continue on this trend, and if clients really have, investments, I know that there are some, sort of default holdings. It's time to sort of rotate it to something else. Yeah, either within China markets, we still like the SOE. We still believe that those are the ones that the SOE reformed. They pay out more dividends. That sort of earnings growth, sustained resilient earnings flow, that would be something that we rather, sort of hold on to.
Is that still where you have the most visibility?
Yes, at the moment. I cannot say that internet or online gaming. It do have its prospects, in particular online gaming. The international exposure, the cash flow is very strong, but e-commerce is a bit more volatile because it all depends on consumptions, right? A very different game. Yeah.
Yeah. I mean, tech's been just done very well. Property is another one. Just given what we've been hearing. Positive signs of maybe they're looking into the supply situation from this Politburo statement this week. Is this going to be enough, you think, in terms of just looking at the inventory side of things to really turn around the housing downturn?
I think it's all about executions, right? I mean, the months of inventory are now hitting a historical high. If they really execute as what, markets sort of interpret that, digest the inventory, sort of convert this unsold inventory into social housing, yes, that would take out the issue, but that's cost you money. Back of envelope, easily we're talking about 2 to 3 trillion RMB. I don't think the government's willing to spend that money. I mean, considering it's a property sector, this is something they want. They don't want to do a quick fix, so making people feel that they can put money back in and speculations and all that, right?
How strong of a signal? Okay, let's say, and we don't know if they'll actually go through with the plan, but isn't that a strong enough signal of intent that the sort of level of seriousness has just gone up a notch, for example, that we do want to fix this problem?
Definitely it shows that, because they mentioned it. This is actually, I think, 4 things they mentioned. This is one of the 4 things mentioned, digesting the oversold inventory. Excuse me. But I think it's whether it's an entire scale or similar to what we have seen in December, put it 350 billion or PSL. I think something similar could happen. Take away the oversupplied issue in the lower tier cities. That will at least alleviate, the worst of the measure. And the higher tier cities, I think the market demand would be able to absorb that eventually.
Okay, Eva, just hold the thought a little bit. We're just getting a little bit, I would say, breaking news right now. So we're getting some movement across the dollar yen. So, oh man, what a week it's been. If you think Chinese markets have been trading in a wide range, check out where the yen has been. So we peaked above 160 on Monday, and then maybe something happened. We don't have confirmation on that. And then yesterday happened, the big dip. And now we're actually trading below the low yesterday, which might indicate we're going into the weekend. And maybe they're on better footing.
Maybe
Mark Cranfield yesterday said at these levels, this is the level they'll need to get to be able to sleep easy over the weekend.
Looks like they did it. If in fact they intervene, right? Yeah. And it looks like they conducted, that second currency intervention. We're still wondering if they did, but if you look at some of these current account figures from the BOJ, it does suggest that maybe they were working this week to really prop up that yen. It's working, at least for now.
Yeah.
That jobs report might be that next hurdle, though, right?
Yeah.
That's still what I'm worried about here right now, and what this means for the dollar here. But as you mentioned, that dollar move is quite significant. I want to bring about Eva. You mentioned about the Politburo meeting, the supply issues. We are starting to see some signs of maybe even tier 1 cities are relaxing some home restrictions, right? I think Beijing was the one this week. Is that going to be the game changer once tier 1 cities start to relax a bit, that could kind of lead to a wave of more stimulus?
Yeah, I mean, if they do really extensively, because if you look at the details, the relaxation is outside of Fifth Ring Road. You've been to Beijing before, right?
Yeah.
And outside Fifth Ring Road, you can imagine where it is. So if they do it like the entire cities, yes, if all tier 1 cities joining in, I think Guangzhou already is done more extensive in terms of easing. That will help, because at the end of the day, people, sort of residing in lower tier city, they always focus on what happened to tier 1. If the prices, people's demand returning to the primary, constructions. Because at the moment, we do have sales, but they're actually happening in the second-tier market, like the resale market. People have no confidence on these developers able to deliver. If the demand going back to the primary, prices stabilize, that will be a very good signal for the other lower-tier cities.
Take us through and you've covered property for some time. Take us through what happens if and when the primary market picks up. You mentioned completions have picked up as well. What are the sectors that then get a boost? Appliances, cars, for example. Property is a proxy for a third of the economy.
It has reduced. I mean,
okay, so what is it now? 20?
15% now.
Oh, okay. I'm 6 years dated. Okay.
And I don't think it will go back to 30. I mean. But if we have a better market, obviously the home appliances, what we call the upstream and downstream, right? The upstream with construction materials, the lift, the escalator, and all that. The downstream would be home appliances. What else? Consumption, because home as a percentage of total wealth in China, I think is the highest on a global basis. So it's have a big impact on people to feel good and want to spend.
Yeah. I think loosely also there's a correlation between people getting married and people buying property. Eva, thank you so much. Eva Lee, the head of Greater China Equities at UBS Global Wealth Management.
Too,
Chief. That too. Welcome back to the China Show. Markets here in Hong Kong, mainland China shut, just keep that in mind, are rallying and rallying quite hard still. 300 points to the upside, Hang Seng Index, 18.5. 8 shares at 66, give or take, and HSBC just coming off a little bit. We were trading above 4,000 earlier on. Early, we had Eva Lee out of UBS. She had a look at that MSCI at 61. She said, ooh, that's a little bit on the high side. Some big movers, bottom of the screens. Alibaba, Xpeng, all really rallying quite hard today. We'll see how long this lasts.
Yep, and we're watching a very interesting case here unfolding in Hong Kong. The city's securities watchdog has started criminal proceedings against Segantii Capital Management for alleged insider dealing in one of the city's most high-profile financial prosecutions. Let's get to our deals reporter, Manuel Belgori. He joins us now. Tell us the details of this case so far.
Yeah, Yvonne, it's a very high-profile case just unfolding here in Hong Kong. Allegedly one of the, most important hedge funds in Asia, definitely well-known in Hong Kong. And, there is allegations of some potential wrongdoing against the firm and the founder and one of the former traders, which has happened to report just a couple of months ago. He was set to join JP Morgan as well. So this whole case is unfolding as we speak, basically.
Why is this firm significant?
Well, they were notoriously well known for helping banks to pull off certain complicated deals in the past, and they expanded years ago across the world in New York, Dubai, London, and they were growing and significantly managed to get some really good returns for clients. So I think amid the deal-making boom years ago, they did quite well. But they are facing some challenges now. We've seen also the news coming out of Korea as well. So they're definitely under scrutiny.
They said that they're going to defend itself vigorously, Segantii. What's next really for the firm now?
Yes, for now, I mean, they are, the next step is later in June, right? But I think, they'll have to defend themselves. It's still very little details on the case. As of now, it allegedly is related to a block trade back in 2017 on a listed entity, but we don't know a lot more than that.
Manuel, thank you. Manuel Baigori there. Quite a compelling and big story, of course, here in Hong Kong. Right, another one, of course, to tell you about is HSBC. Shares should be trading higher as we speak here. So what's happening here is AGM taking place. That's in London, of course, later on Friday. Investors to focus on succession planning following the big news out of the earnings, which was really the surprise decision for the CEO, Noel Quinn, to stand down. For more on this, let's bring in Denise Wee, our Asia finance reporter. Denise, well, thanks for joining us. Tell us about this upcoming meeting. Do they talk about the business, or will succession plans dominate proceedings?
Well, I mean, for the AGM, I think there will be questions around succession planning. What we know so far, and I expect Noel Quinn will probably repeat, is that he's going to take a break, retire, to sort of balance work and professional and personal commitments. He said he's had a very busy schedule. It's a natural inflection point for the bank to retire. So I expect to hear more of the same. He sort of deflected any speculation of tension between himself and Mark Tucker, the chairman, by saying, the main point of contention was that, he's a fan of Chelsea and, Noel Quinn is a fan of Aston Villa. But I think there will be questions around what the succession plan will be. In addition to that, I think people will be looking at the UK bonus caps. That's something else that's also up for proposal that will be on the radar.
Okay. It's interesting, right? Do we know any details yet, Denise, on the succession plan, who the candidates are? Is it going to be someone from Hong Kong or even Asia?
HSBC has been quite careful. They basically said they're looking at external and internal candidates, and they're expecting them to be someone to be appointed in the second half. At least that's the aim. In terms of actual candidates, the CFO, George Al-Hedri, you would be considered a front runner, but it's not super clear at the same time. There are also the heads of the global business lines, Wells, Matos, and commercial banking, Mario Byrne. One thing to note, I guess, is that Ping An has sort of mentioned they want someone with Asian experience. So that's also something to consider. However, HSBC is a UK headquartered bank and they deal with UK regulators. So it remains to be seen what exactly, who the final person will be.
Denise, thank you. Denise Wee, Bloomberg's Asia finance reporter, on what to expect out of the AGM at HSBC in London a little bit later on. Some other stories we're tracking for you today. U.S. law firm Mayer Brown is splitting off its Hong Kong operation to become an independent entity. Now, the breakup comes amid tensions between China and the U.S. Mayer Brown now has more than 150 lawyers based in Hong Kong, covering various industries, including private equity and infrastructure. Hong Kong's economy grew faster than expected in the first quarter, expanding 2.7% versus the 0.8% expected by economists we surveyed. A strong pace is an encouraging sign for officials amid weak Chinese demand and high borrowing costs, and a loosening of home buying curbs boosted property sentiment. But of course, higher for longer interest rates could still dampen investment demand. So you got to wonder what was really driving those numbers. But really, retail sales later on might give us a little bit more clues.
Yeah, whether it's spending or exports or some of the spending that's going on across the government. The initial numbers, though, did show a pickup in shipments, for example.
Yeah.
So Korea, mainland China, and that was really perhaps what moved the needle on the math, right? So blowout numbers, right? We haven't seen a beat this big since 2011 or 2012. So, but the street, they're fairly mixed on what this means moving forward. I think Goldman came out and said, because of the beat, then we have to upgrade our forecast for the year to 3.5%. But some risks remain, like what you just pointed out, higher rates.
Yeah, higher rates. I mean, we talked about the property market. You know, it still might not be enough to turn around what we've seen, just given that the Fed looks to be delaying those rate cuts until maybe further out this year. But yeah, it's interesting, right? The fact that, you know, if we see, I mean, we've seen not that many tourists coming through. You see a lot of, you know, local residents are heading up north to China to spend. So the retail sales picture might show really where consumption growth is looking like here right now. But it looks like if we continue at this pace, Hong Kong could be on track to still hit those targets for growth for this year.
Yeah. Absolutely. So this, you know, this point that we've been talking about, how, you know, China is looking to exports to sort of put a floor underneath their growth. It's actually showing up in these numbers in Hong Kong, right? So, one big system. There we go. So retail sales are coming out later today. Just keep an eye on that as well. And of course, all this taking place against the backdrop of Hong Kong doing very well. By the way, you can get an insider's guide to the money and people shaking up the finance hub. Our Hong Kong edition newsletter that's out every Thursday. This is Bloomberg.
All right, we're checking MGM China. There you go. Another good day there when it comes to the casino space. We're up close to 3% here in Hong Kong. Its parent company, MGM Resorts International, saw its first quarter sales and earnings beat estimates. The CEO, Bill Hornbuckle, told us their aggressive approach to China is paying off.
When you think about a couple of our markets, you know, we question, we challenge, is there going to be real growth there? What are the capital requirements coming up? And how are we best and our shareholders best served? And in a couple instances, you know, we probably will do something, but that's time to tell.
You know, when you look at the excess cash that you reported, I believe it's about $1.2 billion, Bill, and it raises the question, would you consider acquisitions at this point, particularly when it comes to expanding in your digital presence, online sports betting?
When you think brick and mortar, you know, I think less so. We are more interested in new jurisdictions that have real growth. You know, we're building in Japan, and that'll take a great deal of our cash over the next couple of years. But when you think about digital, we see that as the horizon. And I know, you know, we have a partnership with Entain and BetMGM here domestically, but we've invested a great deal of time, energy, and money, and we'll continue to do so internationally through our Leo Vegas acquisition. We now have a content gaming company that helps us provide content into that business. We're looking for other bolt-ons that would make it make sense. We're very interested in live dealer, a proposition we'd like to motivate here from Las Vegas and broadcast to the rest of the world. We think it could be meaningful over time. And so we're going to continue to invest into that space and relatively aggressively, but realizing those are not massive capital allocations or capital outlays. They're more structurally getting a business right for long-term growth.
And Bill, we don't have much time left, but we haven't even talked about China, and we have to talk about what's going on in Macau, where you recently gained share. I think a lot of people got excited to see those details in the report this morning. What do you attribute that gain to? Is that just the overall pie growing? Of course, that recovery is still going on. Are you actively taking share in that market?
No, I think we're actively taking share. Look, we came into the pandemic with about 8 or 9% of the market. We currently sit in the mid-teens. This last quarter was 17%. We've been aggressive in the context of what we've done to the properties, what we've done to the casino floor and the layout, how we've approached a new era without junket operatives. We've had offices all over the globe, most notably in Far East, for 30 years. And so our ability to leverage into our own network and our own systems to go get customers directly and understand their wants, needs, and desires, we think is somewhat unique, and it's paying off. And you can see the results. Obviously, we just hit our quarter over $300 million in cash flow, which was an all-time record, and we believe we can sustain this level.
MGM Resorts International CEO and President Bill Hornbuckle speaking exclusively with our colleagues, of course, Kitty Greifeld and Shonali Basak. Okay, what time is it? 23 minutes into the session. Oh, it's been good. It's been fantastic. We're looking underneath the hood right now. MRR on your Bloomberg terminal, a sense of the big moves across these markets, specifically on the Hang Seng Tech Index. It's just about every single stock is up. A couple of stocks, as you can see, on the way down. So your big ones, Xpeng, Bilibili, Weibo, NetEase, Baidu, Baba, up 4% at least. Benchmarks are doing very well, 2% on the Hang Seng China Index. As we were pointing out, HSBC, so this world-beating rally is continuing. Okay, why not? What is that red tile on my... Okay, I'm now curious what that is. That seems to be...
I can't see either.
No, it's too bright.
And I think we need closed markets. They're showing a lot of other ones that have been
closed.
And
I'm wearing my glasses too at that, which is ironic. There we go. Okay, so a couple of things, right? So we are on track for a fifth week of outperformance relative to the S&P on these Chinese markets. That should be the first time, that first streak going back to early of last year.
Yeah, and you mentioned, 9 straight days that we've seen Hong Kong gain. It brings us back to that longest winning streak we've seen since 2018.
Yeah.
That was 14 days. I think that's the next sort of milestone we have to hit now.
It's quite long, actually.
Yeah. We'll see how this all
I don't even remember what I was doing in 2018.
We were all here, weren't we, David?
Yeah, that was before the protests here in the city, certainly before this. I think there was a virus that went around shortly after that. And that being said, some of these benchmarks are maybe still far away from comparables at that point. Anyway, it's a Monday, Friday, going into the weekend. This is the China Show.
Welcome back to the China Show. It's a bit of a foggy sort of Friday morning, but it's not foggy at all when it comes to these Hang Seng markets in Hong Kong. What's going on here? We're on fire here once again. We're off some of the session highs, but we're still talking about another 1% gains or more. MSCI China, they're also seeing some gains. China remains shut, but it seems like Hong Kong is the outlet to really buy China this later part of the week as well, with, of course, the holiday going on in the mainland. But yeah, there's a lot going on, right? It's the tech space that still continues to be hot. We're watching these Apple suppliers here today. And of course, that biggest drop that we saw in the dollar all year, Dave, certainly is helping overall the entire region.
Yeah, it cuts both ways, right? The Hong Kong dollar and the dollar story on the back of weakness. But also keep in mind, and this is one of the comments coming through on what's been behind this massive rally, is that the fact that Hong Kong dollar is a dollar market, right, because of the peg. So we're up 2 straight weeks on the Hang Seng Index. It's the 5th straight week that Hong Kong stocks have outperformed U.S. peers, and obviously within a period of outperformance these last, 18, 24 months or so. 230 points, 18.5 on the index takes you all the way back to last year. TAIEX is also doing very well. That's more really an Apple story when you look at some of the suppliers traded there as well in that market, TSMC, Hon Hai. There are a lot of big movers as well over in Australia. See Macquarie coming out with earnings today. Block is also a good one. In fact, that's the biggest move across the Asia Pacific last I checked, outside of the big moves we're seeing in the Chinese market. Yvonne was talking about the drop in the dollar, so maybe short covering. When you look at this drop in CNH, for example, we went from north of 720, and we blew past almost like a knife through butter, down through all the moving averages, 50, 100, and 200 moving average, trading at 718 right now. We'll talk about the yen in just a moment. Perhaps that's the subplot across these currency markets right now. Bond yields are coming off a little bit right now. We're off, of course, on the U.S. 2-year yield, for example. We're going into a fairly important jobs report, which, by the way, when you look at estimates, it still looks fairly robust, what markets are expecting there. Equity futures are doing this. Not on your screens right now. U.S. futures, because of the Apple story, catching a strong bid. S&P, NASDAQ ETFs, for example, in after-hours trade. Bloomberg Dollar Index, bottom of your screens right now. So, yeah, it's a good day to be trading these markets if you're long, of course. So plenty of catch-up to do, I guess, on Monday when mainland markets reopen.
Yep, we'll see how this all goes. Let's bring in Paul Dobson now, our Bloomberg executive editor for Asia markets. And Paul, let's talk about what's been going on, this fiery sort of Hong Kong rally that we're seeing here. It seems like there's an element of fear of missing out now. I mean, what are you looking at this morning?
Yeah, I think that's right, Yvonne. The FOMO is starting to play up. Everybody wanting to jump into this trend and not miss out on the opportunity, given the force of the rally. We're now into a bull market and continuing to go north as well. I think there's a few things that people like here. The tech story is performing well at the moment globally and locally. Also, There's been steady flows into Hong Kong from mainland China. Perhaps some currency concerns had played into that, Hong Kong being a dollar-defined or denominated market. But nonetheless, it shows some building confidence there. And also, in general, the outlook for the Chinese economy seems to be turning ever so slowly a little bit more favorable. Certainly some green shoots there. People starting to catch wind of the possible further stimulus. We heard from the Politburo earlier in the week, again, offering that hope of some supportive measures on the policy side, including rate cuts or RRR cuts. And in general, there's the cash for clunkers kind of a trade-in program that they have going on, and efforts to help the property market as well. So there's lots starting to tip into the favor of the equity space in Greater China. Lots of risks still. You know, we've all seen the frothy rallies. We know what this market can look like when it gets too carried away and how quickly that can drop off again. So, you know, when you're running into a FOMO rally, beware of the of how quickly it can run out of gas as well, I guess, is the one thing that you want to have in the back of your mind.
Yeah, you know, we were counting, Paul. We've been here at least 5 or 6 times, you know, the extent of this price rally and amidst, of course, what's been a broader bear market. Let's hope we're snapping out of that. I want to ask you about Japanese currency. You know, it's quite fitting as we wrap up really what's been a very eventful week. We still don't have confirmation whether or not they did it or not, but you look at markets, they say they have nothing to say, but certainly you have something to show when you look at dollar-yen now trading below the low. Yes, I think we're back to levels of mid-April here as far as the strength in the Japanese currency is concerned, Paul.
Sure. So it seems that there's been a little bit of a line in the sand drawn here and a little bit of favoritism or favorable momentum coming through from the US side overnight as well, with those lower bond yields and a gradually or generally and broader weaker dollar too. So it's turning into a pretty good week for Asia FX overall. We've seen some pretty big gains, for example, for the won today, Taipei, all of them turning away from those multi-year lows that we saw over the past couple of weeks. And really, you know, the line in the sand that was drawn for the yen when we broached 160 on Monday morning seems a long way off, but also seems to have done the trick, at least for now. It's that idea that all of a sudden, if you're running a large speculative short position on the yen, you're going to think twice, right? You're going to think twice about how big a position you want to run, when you want to time it as well. You don't want to get stopped out or caught short by any official intervention or any suspicions of that, for that matter, that could ping your stop losses, particularly over today and on Monday when it's a Japanese holiday. So that seems to have put the wind up markets a little bit, which is exactly what you'd expect and what would be hoped for if there was intervention, trying to get away from this one-sided trade, this idea that nothing can go wrong, and trying to, you know, unsettle the markets somewhat, raise implied volatility. So all in all, with that sort of marker set, it's been a more positive week for Asia's currencies as well. Of course, the key now will be non-farm payrolls tonight, and whether that continues to allow the dollar to weaken or whether that turns things around again for the US currency.
Yeah, I mean, the expectation is 240,000 jobs. That's the slowest pace we've seen since November. I mean, if we continue to see numbers like that, would that be risk on or risk off for markets, you think, Paul?
Yeah, brilliant question. I think the market won't like a very high labour number. It certainly won't like a very high average hourly earnings number either. So if that were to come in ahead of expectations, I think that would have the market worried. We just started to price back in again the idea that the Fed could be a little bit more aggressive in its cuts this year into November, having sort of, you know, almost given up on the chance of any cuts this year earlier in the week before the Fed. So if that disappears again, then it could certainly push up those bond yields and lend the dollar some strength, which would probably, all things being equal, be an unfavorable environment for the equities markets as well. But it's a difficult balance because the economy is looking good in the US and the market is deriving some strength from that as well. So it might end up being a little bit neutral for the equity side, but certainly in the bond side it would be scarring if it was a very large labour number and a very high average hourly growth figure.
Paul, thank you. Paul Dobson, our executive editor for Asia markets in Singapore for us. just getting us up to speed on markets and what to look ahead to here. Right, well, speaking of looking ahead, why Bloomberg Intelligence, and we're talking Apple here, sees a stabilization narrative as it pertains to the company, specifically its business in China after upbeat global revenue forecast. More on the outlook for Apple next. This is Bloomberg. Right, welcome back. The China Show. You're watching, right, Apple earnings, big one. Out a couple of hours back, the CEO, Tim Cook, says he maintains a great view on the China business over the longer term. Speaking with investors after the latest sales beat from the company, he says that the firm has work to do in the country outside of the iPhone sector. Mark Gurman, our tech reporter, has the details for us.
Apple reported better than anticipated Q2 earnings results, with the iPhone declining about $5 billion on an annual basis, in addition to the same for overall revenue, but the device actually growing in mainland China, according to CEO Tim Cook. The iPad also declined, but that was to be expected given that the device had not been updated since the end of 2022 and that new versions of the iPad Pro and iPad Air are coming next week. Services and the Mac were bright spots on Apple's earnings report, bringing in growth to the iPhone maker compared to the year-ago quarter. One negative was the wearables, home, and accessories category. That fell about $800 million. Luca Maestri, the company's CFO, said this was due to a tough compare from a year ago when the Apple Watch Ultra and the second-generation AirPods Pro saw strong sales in the second quarter of last year. Analysts and Apple executives were all very clearly excited about the prospect of Apple moving into generative AI. Apple plans to announce a slew of new AI features at its Worldwide Developers Conference on June 10th. For Bloomberg News, I'm Mark Gurman.
All right, and Bloomberg Intelligence also been chiming in about what we saw in those sales in Greater China. So that revenue decline of 8%, still seeing a slowdown there, but at least it was better than expected here. I think the street was expecting an 11% decline, so still looking better. But, of course, doesn't mean that we're seeing that stabilization in sales. Our senior analyst, Robert Lee, is with us now. What did you make of these earnings?
Yes, I suppose in contrast to recent other tech results where expectations have been so sky high and, you know, a lot of extreme optimism based in, the reverse was true of Apple. There were low expectations, people were fearful about their China business, and I think it's fair to say the numbers were less worse than expected. The numbers themselves for the quarter were roughly in line, but as you've already mentioned, the decline in the China business was about 8% down versus expectations for 11%. And more importantly, the guidance for the coming quarter was slightly better than expected, with commentary from management implying they're seeing some sort of stabilization on the China side. But I guess a key question for people is Apple's China woes, are they more cyclical in nature, or is it more of a structural issue for them?
Do we have any insights on that?
Set myself up for a question now, I guess. I think as I've said before, you know, in these cost-conscious times, the local brands, Huawei in particular, offer great features at a reasonable price. Right. And the quality of the domestic handsets in China is pretty good these days. So there's a lot more choice there available. I think there is also a slight nationalistic angle to it, that people want to buy local, buy domestically. And also, the handset market is slowing as well. So there were three headwinds that Apple has to fight in the coming quarters.
Sorry, the reason I also mentioned that, too, is Tim Cook did mention outside of the iPhone, for example, he said that they have work to do, for example, in that market, and wondering what growth pillars does Apple have, not just in China, in the region here as well.
Well, I guess Apple, although they've got a sizable service business, it's all about the product. So what is the big new killer product for them? So we've seen a Vision Pro, and again, I think that's a very interesting product for your technophiles, but is it a mass market product? You know, for your average man or woman on the street, you know, $3,500 US is an expensive buy. So I don't really see that that's going to go mainstream. They need a new killer product. Is AI going to help enhance their iPhone offering and drive new demand on there? It's early days. We'll have to wait and see.
I think that's the big thing. If they come up with some device or new device like the iPhone that has AI capabilities, right? How do you see that really helping replenish the demand picture in any way? I mean, what would you need? What would you want to see
a refresh
in a phone?
I think to some degree it could, but then again, everybody else is doing the same, and Apple's playing catch-up, again, without wanting to be too skeptical or cynical on that. So yeah, an AI-enabled device, if it had some interesting features, could well help stimulate some additional demand for them. But is it likely to transform them or the growth outlook, given the competitive backdrop? I would doubt it, to be honest.
Right, Robert, thank you so much. Robert Lee there on most things Apple, because we left out the buyback, which is the biggest one in, U.S. history?
Yeah, $110 billion. Really following what some of these other tech giants have announced as well. But it certainly was going to be lifting the stock and maybe sentiment overall. But yeah, that certainly did help.
Yeah, I mean, let's not forget, right, this company is sitting on a massive cash pile. Yeah. And we've actually had to look at the data, and kudos to our colleagues, of course, for crunching the numbers for us. So Apple just simply topped what they did a few years ago of about $100 billion. So the top 6 buybacks in U.S. history are all Apple, right? So you're looking at 2019, a series of 90 billion figures. Arguably, they're simply moving along the lines of inflation, just to get that in as well. That's a source. There's a source, of course, bottom of your screens. Perhaps this was the bigger driver of the stock going into the U.S. Open today, right? When the shares are up, 6% in your post-market. Okay,
because I think I guess some people are saying that maybe Apple was just a bit worried that they're no longer seen as that growth stock.
Yeah.
And they're acknowledging that maybe it's more of a values play than really growth. So maybe that's why returning money to shareholders is better than really talking about new devices and the like until they can actually announce some new
something
products.
New. Something new.
Right, yeah.
Well, I need to buy something new from Apple today to talk about that later. I lost something. All right, Qualcomm shares jumped the most in 2.5 years. Not my phone, I have it. 2.5 years after an upbeat forecast pointing to a rebound in demand for smartphone chips. Now, the CEO told us what's driving growth in the key Chinese market. Have a look.
The story on handsets in China is pretty simple. We've seen the market had stabilized. We had said about that a couple quarters ago. And users are buying better phones. It's really, for us, a story of flagship and high tiers within the Android, especially a lot of those flagships that are launching with Gen AI. I think we see the very beginning of Gen AI coming to devices, and that actually drove a lot of the growth, and it's 40% not only in this quarter but actually expected to have the same in the next. As we look at the guide, it has been a good story as the smartphone market stabilizes and Android flagship has stayed resilient.
Cristiano, as you know and our audience knows, we will talk about on-device when it comes to generative AI. Let's just linger a moment longer on China. It looks like some of the domestic players that are Android-based are gaining market share against Apple and the iPhone. You see that in the IDC data. You see it in the Counterpoint research data. If that is the case, where the domestic players are gaining that market share, what does it mean for Qualcomm?
Look, the way you should think about our position in China in the handset market, we have been very focused on the premium and high tier with Snapdragon. So when an Android OEM from our customers, Xiaomi, Oppo, OnePlus, Honor, Vivo, when they're selling a flagship device, we have a lot of content. Not only we have the modem content, but we have a lot of the application processor, the AI engine. So that has been a positive development, and that's what is being driving the content increase and the ASP increase, especially when the mix changes to a premium device. The fact that the Android flagship in China with the Chinese OEMs had been stable, proven to be resilient, and see positive momentum as the mix get richer. Chinese users are buying a better phone. That's a good story for Qualcomm, and it's reflected in the numbers.
And that was a Qualcomm CEO, Cristiano Amon, speaking with our colleague at Ludlow there. Plenty more ahead. This is Bloomberg.
Here's some top geopolitical stories that we're tracking at this point. U.S. officials say Russia and China are working more closely together on military issues, including a potential invasion of Taiwan. Director of National Intelligence Avril Haines here told Congress that Beijing definitely wants Moscow to be working with it on Taiwan. Now, she said intelligence assessments indicate increasing cooperation between Russia and China across almost every sector of society. Now, the Philippines has summoned China's envoy in Manila to protest the use of water cannons against the Philippine ships in the South China Sea. The latest alleged incident happened on Tuesday. Now, Manila is demanding Chinese vessels leave the area of the Scarborough Shoal immediately. Now, China claims nearly the entire waterway, including that particular area, and has called on Manila to stop what it calls provocation.
And let's bring in our Bloomberg Opinion columnist on that very topic now, Karishma Vaswani. She thinks that Beijing might be playing a risky game in the South China Sea. She joins us now from Singapore. Why do you think so, first of all? And how do you see some of these regional players like Japan, Australia really managing what's going on?
Yeah, it's a really difficult situation out there in the South China Sea, Yvonne, as David and you have set up in the introduction. Effectively, it is a clash of wills, right? Because China says that it owns pretty much entirely all of it. And, you know, let's not forget, there are crucial oil and gas reserves in this area. It's a lucrative fishing source as well. So key source of food for a lot of the populations of the countries that also believe that they have a stake and say that they have a stake in the South China Sea. But the problem is, increasingly, almost every day, we are seeing this sort of cat and mouse game between China and the Philippines. And in particular, that has become a really key issue for Manila. We've seen, another incident this week. And the red line now, according to the Philippines, is that after all of these sort of attacks from Chinese Coast Guards on Filipino vessels, where they are spraying huge amounts of water from these water cannons, that if a Filipino soldier was to be killed as a result of one of these attacks, that is when, according to President Marcos Jr., that the U.S. defense treaty with the Philippines would be invoked. Now, nobody wants that. Nobody wants a clash like that in the South China Sea, particularly with the kinds of geopolitical problems we have around the world. So it's a really delicate situation, not just for the Philippines, but also the United States, Japan, and Australia.
What's a possible off-ramp here for all sides at this point, given these recent events specifically, Karishma?
Yeah. I mean, you know, it's the kind of thing that keeps war game planners up at night, right? Like, how do we make sure that we de-escalate from this situation, particularly when it looks like Beijing is consistently pushing at these red lines? Now, one of the ways that we've seen deterrence put into place and into effect has been with the United States building up its alliance of partners and friends in the South China Sea with consistent patrols with Japan and the Philippines, for instance, also getting Australia on board, but also diplomacy. And I think this is a really key fact that we need to take into consideration and see more of this kind of thing happening, particularly when you have a country like Australia that has seen better relations, I should say, with Beijing in recent times. We've seen, you know, the sort of trade sanctions lowered between the Australians and the Chinese, the trade tensions, I should say. China has even proposed the possibility of maritime discussions with Canberra. And I think that is something that Australia should really look at carefully. Not so much as to be sort of co-opted into one side or the other, but bringing more like-minded nations, members of the Association of Southeast Asian Nations, for instance, ASEAN, countries who also have stakes in the South China Sea, to multilateralize the issue so that they can try and de-escalate tensions at a time of real global upheaval.
Karishma, thank you. Karishma Vaswani there out of Bloomberg Opinion in Singapore for us. A brief look at markets right now. So we should be going into the Japanese lunch break. No trading in Japan, so no crash treasuries. We do have the treasury futures on your screens. Weakness a little bit right now, but generally speaking, it's been a trend of lower yield, generally speaking, at least from Thursday into right now. It's also been a weak dollar story, which is perhaps helping things along as far as risk assets go. We're up by 1%. Asia ex-Japan, NASDAQ futures, feeling the Apple effect, 0.7%. So it's looking like it's going to be a good Friday over in the U.S., barring, of course, any nasty surprises out of the jobs report. Earnings out of Macquarie, Tencent's leading tech here. Financials in Korea also catching a bit after the details. The corporate value up program being unveiled, and gold's on the back foot, and also gold miners. This is Bloomberg. All right, so, the weather's been horrible recently in the last 6 months here in Hong Kong. I'm kidding. Last week or so, it's been terrible.
Almost like raining every day.
Extreme. They had a lightning show on Tuesday evening.
It was hail, reportedly.
It was hail or tornado.
Up in Guangzhou.
In Guangdong province on Monday, and, this is Friday for us. But at least markets are doing well. Not that that's any consolation. And, yeah, it's been humid, too, as well. And I'm digressing here as well. So I've had to... my dehumidifiers are running on full capacity right now because of what's taking place. Speaking of liquidity or the lack of it right now, you don't have Japan trading, you don't have mainland China trading, although you are getting this rally in Hong Kong. Yvonne, check that out.
It's remarkable, right?
Yeah.
This comeback that we've seen in Hong Kong stocks. We talked about the dollar peg. That might be that sort of haven play here amidst all this volatility around the Fed, this repricing and the dollar moves that we've seen. But yeah, and even without Chinese investors, without those southbound flows, it looks like there is still some momentum behind this rally, which is quite telling. I think we learned that in the last few sessions, really, that this can go without
the southbound flows.
Yeah.
And so we're up 9 days down the Hang Seng Index. Just to give you a sense, HS Tech, which is about 4,000, we're up now 30% from the lows. We're in fact exhibiting short-term signs of maybe overbought conditions. We can talk about that later, but what do we need to think about at this point in the rally?
Yeah.
Let's bring in Zhikai Chen, head of Asia and Global EM Equities at BNP Paribas Asset Management, here with us on set. Nice to see you and good morning.
Good morning. Thanks for having me.
It's a happy Friday, isn't it?
Yes, long week.
Long week.
Weather-wise.
Yeah.
So hopefully we are getting a calm weather ahead.
Hopefully. In markets, the clouds seem to be parting a little bit as far as Hong Kong and Greater China equities are concerned. What are the risks 30% into a rally we need to be thinking about at this point?
I think the rally can really be sparked from two things, right? One is the valuations. If you recall, right before Lunar New Year, we went to a level where we're hitting new lows from last year. And I think we had a pretty strong series of policy support from the Chinese authorities, and we also saw concrete market support in terms of the national team buying the ETFs. We see this data. And I think that sparked the rally post-Lunar New Year. And post that, we have also seen pretty good macro data coming in. First quarter GDP obviously better than expected.
Yeah.
Some nitpicking over the consumption number for March, but overall the macro situation seems to have stabilized in China. I think that led to a lot of global investors, which has been very underweight China for most of last year and entering this year, to perhaps reduce a little bit of their underweight.
Yeah.
We are up about 30%, as you mentioned, on Hang Seng Tech, but if you look at the valuations, you're probably still not stretch for some of these names that's still going to be structural winners within the overall e-commerce and internet space, I would say. Yeah.
How do you look at flows? Because, we talked about the dollar peg. Maybe that is a way for people to kind of seek shelter amidst this volatility around Fed repricing and the like. Are you seeing a lot of that rotation come through from markets like Japan, markets like Taiwan, coming back into the mainland market?
I think there's probably some of that from the Japan rotation because there has been a one-way trade for some time now. I think for the other countries, it's less obvious to me because for North Asian economies, typically their currencies are not that volatile relative to the USD. So the relative changes of a few percentage points probably doesn't spark that trade. But that's probably more from a macro trader point of view rather than for equities, I would say. Yeah.
So for someone that overlooks overseas funds like yourself, right? So EMX China has done very well. Being underweight China, you've paid, you've been rewarded to stay underweight. Do we need to rethink that now?
I think to
protect your alpha?
Yep. I think to a certain extent you need to. I think a lot of the underweight that was taken was because people are no longer sure about the outlook. And if you really grind down to it, it's more or less a confidence issue, right? Be it from the consumer perspective, be it from the corporate perspective, and people just wanted to see what else the authorities could do to support confidence. And I think the latest round of policy support that we've seen earlier this week seems to suggest that more is on the way. And I think that's kind of anchored people's expectation and prevent a further vicious cycle downwards. And that's definitely been helpful. And if you look at the rotation so far this year, very clearly Hong Kong has been a clear winner in that particular race from the rotation from EM, ex-Asia economies outperforming last year and then outperforming this year. So overall EM has outperformed Asia, ex-Japan on a year-to-date basis.
Okay, and what can you still chase then?
In the Hong Kong space, I think some of the e-commerce names, the internet platform names, have given good results and obviously pretty okay guidance. I think the guidance right now at this point in time, if they are not below expectation, given valuation, I think it could rally. We've also seen companies where the results were in line, but guidance was not that exciting, but the share prices rally off the bottom of the lows. Yeah.
Another theme that's emerged in the region, so we talked about China, is memory and AI and how you express that in the region. Between the two, what's a more compelling trade at the moment? China, or do you go with this AI narrative in the region?
You have to pick your battles, I think. I think in terms of AI, it's very clear that Asia is the factory, for the lack of a better word, for most of these supplies globally. Particularly in the CPU, there's pretty much one player at this point in time globally. And for the memory, there's 2.5, I would say. And the two big ones are obviously all in Asia and South Korea. I think this is a part that is quite exciting in a way. If you look at the memory cycle, we probably have never seen a memory product take off so fast ever in the memory history, if you will. So we are talking about going from nearly 0% in the beginning of 2023 to now, based on company forecasts, by the end of 2025, you're looking at 25% of the company's revenue. So this is a very, very, very fast ramp. And some of the companies have basically said that, for the initial version of HBM memory, they're sold out for 2025. And a lot of the companies are now pushing out the second generation or starting to ramp from the second quarter or the second half of this year. So this is a space that's quite exciting. Also anchoring that is the mega tech companies globally. You've seen all the big Magnificent Seven reported. I think one of them missed. But interestingly, their miss was basically because they talked up their capex, saying that we need a bit more patience because we're really investing into this AI team. So from a global capex point of view, this seems very well supported because you obviously not put your latest AI CPU chips and combine them with something that is slower. So you want the best that you can get. And Asia is the only way to provide it right now.
So in this current sort of AI wave, you still think memory is the best place to position versus like AI applications or something? Is that something that's further down the road then?
That's further down the road. And in Asia, there's really not a lot of companies that's taking advantage of that. We have some companies in China that are ramping up their own AI version, their own, if you will, ChatGPT part of it. But that still seems a little bit behind the curve compared to what OpenAI has been able to demonstrate with some of their products that we've seen.
Final question. On macro, does macro matter? Rates? Does it matter that the Fed's not going to cut rates if they don't cut rates this year? How does that affect you?
From the equity share prices, it clearly mattered, right? I think for the LATAM economies, which did very well last year.
You oversee LATAM too.
Yeah, and that has seen a pretty significant pullback. I think a big part of this is that one of the catalysts that we are looking for this year, at the beginning of the year, was that the Fed has signaled that it's peaked. They think that interest rates are sufficiently restrictive, and they believe that they could cut at some point in time this year. I think at the beginning of the year, we're looking at the Fed forecast of 3 cuts, right? But now, with ironically very strong inflation data in the U.S. and a little bit of disappointment on the growth side, that seems to be pushed out. I think that is probably a headwind, if you will, for that. But generally speaking, if the U.S. economy continues to be strong, the consumer continue to consume, should be a fairly good setup for EM generally.
Have a great weekend.
Yeah.
Nice to see you.
Thanks for having me.
Head of Asia and Global EM Equities at BNP Paribas Asset Management. Right, plenty more ahead. Rally is just coming off a little bit here in Hong Kong, still up over 1% though. There you go, on your screens. This is Bloomberg.
All right, here's your China brief this morning. A look at what's making headlines in national newspapers and trending on social media. And as China goes on holiday, we're getting some, I guess you could say, preliminary travel data out there, right, from what local media is saying. So Xinhua saying railway passenger trips hit a record of almost 21 million on Wednesday. That is the official start of the 5-day May Day holiday. China Railway says the network is expected to handle 144 million passenger trips from April 29th all the way to May 6th. And residents aren't just traveling domestically. The Global Times says data from travel agencies shows a strong surge in overseas tour bookings. International flight bookings for the first day of the May Day holiday reached a record high. We're talking jumping 20% compared with 2019. So looks like they're heading out. Holiday travel also trending on Weibo, and many users are commenting on how crowded some of these tourist places are. Some reactions like, I'd rather stay at home. I don't want to see people mountain, people sea. 人山人海. So that's the translation there. My May Day travel, bathroom, dining room, couch, bed. I laugh at those stuck in tourist sites. And someone said, I would suggest avoiding Changsha. It's crammed like cookie jars right now. So some of them are avoiding it. Also trending, young people eyeing less famous or niche places to avoid crowds. Examples include Shantou, Huizhou in Guangdong, and Zhoushan in Zhejiang province as well.
Yeah. That sounds like a weekend, actually, for most of us, right? Which is, what is it? So bedroom, bathroom, living room, and kitchen. That sounds like a regular...
You'll get bored after 3 days.
Yeah. No, but, it's interesting because... So this is coming at a time where... we were talking earlier with UBS and Eva Lee, right? So what are the next things we need to watch for this rally to continue? And number one on her list, if not near the top, is spending.
Per capita spending.
Yeah. Not where they're going. Not
volumes.
No.
Not numbers of
not
how
numbers,
many people.
not Xiaohongshu posts per capita, for example. Right? Spending, and because it's a reflection that the woes in the property sector have somewhat diverged from consumer confidence, right? We've seen initial numbers of where they're going.
And she saw it in the Qingming numbers during that short holiday.
Yeah,
that
there was
we
an initial
actually
sign.
Got back to pre-pandemic levels, if not even better. If we see another holiday of this, maybe we're starting to see a trend.
Maybe, pun intended. Yeah. There we go. It's gotta be. Later. Okay.
Let's move on.
Okay. Let's talk about the tangible impact on the travel industry, transport particularly. Our team at Bloomberg Intelligence has been looking at the numbers here, travel sentiment in China. Tim Bacchus with us here, Senior APAC Aviation Industry Analyst. I want to ask you about the impact to earnings, but let's start with sentiment and the survey. Where do people want to go? What are the preferences right now?
So thanks, David. We've been conducting this survey now for about a year. We've had 4 or 5 installments of this. And so I think what's interesting about this survey for 2Q, which of course encompasses the May Day holiday, is that we're beginning to see some green shoots. International travel has been recovering much slower than domestic travel. I think domestic obviously very strong. Yvonne was pointing that out. Places are very crowded. You look at where we are versus 2019 on the domestic side, on the air passenger sentiment anyway, it's up 20%, right? International's been lagging. But what we see in the last survey then is that a pickup in the number of people who have booked travel, both booked domestic and international, or even international only. It's been the high since our survey started last year. And so we look at that data. We also look at the data from the airlines. We look at the data from the government, the CAC regulator, the first quarter data. And all the trends seem to be pointing up.
Okay. Are we still seeing, maybe people are heading out, and international travel is certainly one thing in China. Are we seeing foreign passengers or foreign tourists coming back to China? Yes.
So that's actually an area where we think it's much weaker, right? Now, so of course, China is doing some things to try to stimulate demand to come into China on the tourism side. Lots of European countries are now visa-free to come into China. I think, though, when we look at the way the airlines are reacting to this, and they're reacting to what they see in terms of demand, the foreign carriers, the ones based in the EU or the ones based in the United States, are not adding capacity back nearly as fast as the Chinese carriers. In fact, it's something like 55-60% seats compared to 2019 for European carriers and all foreign carriers, sorry. Well, the Chinese are more like 85, 90, 80, maybe 88%, I think, for the second quarter. So the demand that's coming seems to be more outbound. That seems to be stronger than inbound, and the airlines are reacting to that.
And so would the earnings impact then be mostly visible and felt among the domestic Chinese carriers? Well, the Chinese carriers, not domestic, the Chinese carriers.
So the interesting thing is that despite all this strength in international, again, you have some strength to Japan, strength to Korea we're seeing in our survey, Southeast Asia, Singapore, because of its visa-free arrangements as well. You would think then, okay, this has been positive for earnings. But what we saw in the first quarter earnings that came out just only last week and earlier this week is that if you're exposed to international, you haven't done as well. The airlines with domestic exposure have done much better. Spring Airlines, Hainan Airlines, Junyao, which are less exposed to international, even China Southern, the only one of the big three to make a profit in the first quarter, is the largest airline domestically and the smallest internationally. China Eastern and Air China made losses for the first quarter. So it's not translating yet, that international outbound travel, it's not necessarily translating earnings yet.
You mentioned some of those destinations. Where else is it hot now? So Japan, Korea, where else?
So I think what's driving it, again, from our survey, is that currency is a big, big factor, okay? And so with the renminbi weak against certain countries, then we've seen a tail off in terms of interest in those destinations. Whereas Japan and Korea, with the weak won and the weak yen, looked very, very attractive. And I think the Chinese travelers are still being quite frugal, right? And we're not seeing, well, we're seeing some upticks in spending sentiment. It's coming off a really, really low base. So I still think that the traveler is, they're strapped to an extent by, the stock market in China, the wealth effect, the property market. And so, there is a bit of frugality. And the airline that made the best earnings, record-type earnings, was Spring Airlines, the true low-cost airline in China. So are they diverting traffic to, where they can get cheaper air tickets?
Yeah, I guess we'll have to wait 2-3 quarters before we see the impact from international. Fantastic work. There we go from our team. Tim Bacchus, our senior aviation industry analyst. We'll take you now to this press briefing taking place here, and I believe you're looking at defense ministers there. The U.S. Secretary of Defense, the Japanese Minister of Defense, the Australian Deputy Prime Minister, and also the Minister of Defense there, that's Richard Marlton, of course, the Philippine Secretary of National Defense, holding this news conference. This is taking place, by the way, in Oahu, Hawaii. There we go. We'll revisit this once we do get headlines coming through out of this briefing taking place. In the meantime, though, let's have a look at where we are market-wise, and it's been a very good Friday so far. We're about a couple of hours into the session right now. And, yeah, here we go. MGM China, one of the big ones playing through.
Yeah, we talked about the recovery in Macau was looking pretty strong in April. The May Day holiday could be another telling sign as well. You take a look at what's been going on. The parent company, MGM Resorts International, saw its first quarter sales and earnings beat estimates. The CEO, Bill Hornbuckle, told us their aggressive approach to China is paying off.
When you think about a couple of our markets, we question, we challenge, is there going to be real growth there? What are the capital requirements coming up? And how are we best and our shareholders best served? And in a couple instances, we probably will do something, but that's time to tell.
When you look at the excess cash that you reported, I believe it's about $1.2 billion, Bill, and it raises the question, would you consider acquisitions at this point, particularly when it comes to expanding in your digital presence, online sports betting?
When you think brick and mortar, I think less so. We are more interested in new jurisdictions that have real growth. We're building in Japan, and that'll take a great deal of our cash over the next couple of years. But when you think about digital, we see that as the horizon. And I know we have a partnership with Entain and BetMGM here domestically, but we've invested a great deal of time, energy, and money, and we'll continue to do so internationally through our Leo Vegas acquisition. We now have a content gaming company that helps us provide content into that business. We're looking for other bolt-ons that would make it make sense. We're very interested in live dealer, a proposition we'd like to motivate here from Las Vegas and broadcast to the rest of the world. We think it could be meaningful over time. And so we're going to continue to invest into that space and relatively aggressively, but realizing those are not massive capital allocations or capital outlays. They're more structurally getting a business right for long-term growth.
And Bill, we don't have much time left, but we haven't even talked about China, and we have to talk about what's going on in Macau, where you recently gained share. I think a lot of people got excited to see those details in the report this morning. What do you attribute that gain to? Is that just the overall pie growing? Of course, that recovery is still going on. Are you actively taking share in that market?
No, I think we're actively taking share. Look, we came into the pandemic with about 8 or 9% of the market. We currently sit in the mid-teens. This last quarter was 17%. We've been aggressive in the context of what we've done to the properties, what we've done to the casino floor and the layout, how we've approached a new era without junket operatives. We've had offices all over the globe, most notably in the Far East, for 30 years. And so our ability to leverage into our own network and our own systems to go get customers directly and understand their wants, needs, and desires, we think is somewhat unique, and it's paying off. And you can see the results. Obviously, we just hit our quarter over $300 million in cash flow, which was an all-time record, and we believe we can sustain this level.
There we go. MGM Resorts International CEO and President Bill Hornbuckle speaking with our colleagues Shonali Vasek and also Katie Greifeld. Okay, Hang Seng Index, bottom of your screens. We're now just up 0.9%. On that specific level, of course, we're coming off highs of the day. We were trading up as much as, I believe, just north of 18,500. But it's still a good day.
Yep, we got plenty more ahead. This is Bloomberg.
Right, welcome back. You're watching the China Show. Let's talk about golf. Why not? Pro golfer Phil Mickelson has given what might actually be his biggest hint yet that he is considering retiring from the sports. He spoke with Bloomberg for an upcoming episode of Latitude with his Linda Amin. Here is a sneak peek.
I'm 53 now, and my career, you know, if I'm being truthful, it's towards its end, and now I would like to help others find the same enjoyment, fulfillment that the game of golf has provided me. I'd like them to experience that as well. And so there's moments where you're out on a golf course alone and you have this solace, this very solitude, and you're at peace. Or when you're with your family and friends where you're laughing and having a good time. Or when you're competing in the club championship or the junior event, like you're feeling that competition. Or when you're playing golf at the highest level and competing against the best players in the world. Like all of that creates such fulfillment, whether you're practicing on your own or you're with friends. There's so many great things about this game of golf, and I would love others to experience those things.
All right, Phil Mickelson there talking a bit more about where his career is going to be. There's still the U.S. Open, which he has not yet won. So he's maybe eyeing that before
Still,
maybe he
an itch to
puts down
scratch.
his golf clubs.
Okay, certainly on the back nine, as they say in the sports.
Oh, yeah.
Okay, there we go.
I didn't even know that made sense. We're not golfers in any way.
How was that for faking it till you make it?
GM looking great though, right? We're seeing basically equity markets are bid. Hong Kong is up some 1%. The dollar continuing to hold those declines across the board. It's a happy Friday. Have a great weekend. That's it for us here at the China Show. This is Bloomberg.